Sure,
Assalamu
sure.
alaikum, and a very warm welcome to the analyst briefing of Systems Limited. This is for the full year, fiscal year CY 2025 and calendar CY 25 both. On behalf of Insight Securities, I would like to welcome you all to the analyst briefing session. We have with us the senior management of Systems Limited, led by Asif Peer himself, who is the CEO, Ruhi Khan, who's the CFO, and Muhammad Tahir Sahid, the Chief Investment Officer at Systems Ventures. Basic Systems has delivered its results today in the morning, and we with a PNL and balance sheet which is readily available to you. So, without much ado, I would hand it over to the man himself, Asif Peer, to explain us in detail what has been happening in the year. Asif, over to you.
Okay, Assalamu alaikum and good morning, good afternoon to everyone, or good evening, wherever you have joined from. Uh, I think thank you very much for attending our session regularly, and I think we will just I think most of you know about systems, so I will just not take too much time on this slide. Of course, we are growing globally and especially focusing on data and AI verticals, and we are vertically led organization with 275 plus customers. And we have a huge backlog from growth perspective that we are getting from our customers, right? So now we have, as Zubair mentioned, that we have delivered results, and I'm really, Rui will go over the financials, but I'm really grateful and thankful to my leadership team. We have achieved like about close to 50% growth on our profits and grown about 20% on our top line number as well, in almost a constant currency basis, like as dollar didn't devalue as we were expecting or something. So we just grew through efficiency, made sure that we keep growing, we keep signing the good business, quality business, good rates. So that's why we are very focused on margins. And that's how you can see the growth. And with the good conversion, free cash flow generations, that what company always focus. FCFF is our key driver that we look up. It's more than the profit, that we make sure that our cash flow is healthy so we can pay the dividends and keep growing organically without raising the debts in the balance sheet. And of course, we can use this cash to acquire more companies, as there may be an opportunity in this unprecedented time, I would say. So we are really ready for this kind of an immediate opportunity. So our partnerships with Microsoft and all other principals have been strengthened year on year. We have been in their top priority. We have been receiving accolades across the board. So we're very like from a result perspective, at least if the fact sheet you look at it, it has been a phenomenal growth by the company. So I will hand over to Ruhi for just taking over the numbers, and then we will spend most of the time in the Q&A, as I can understand people have a lot of questions. As I said, it's an unprecedented time, so would be more than happy to answer any questions that arises. So Zubair and Tahir and Ruhi will moderate, and would love to answer as many questions as possible. Thank you.
Thank you, Asif. Good afternoon, good morning, everyone. So I will just quickly cover the financial performance. The results for this year are amazing. We have shown 18% growth top line, 37% growth in our GP, with 28% GP margin. Last year, our GP margin was 24%, so there's 4 percentage point improvement in our GP margin. Operating profit margin has improved by 3 percentage point from 12% to 15%, showing tremendous growth of 44%. At EBITDA level also, we have shown 35% growth, and our EBITDA margin has also improved from 15% to 17%. So all of this has been possible through very strict control on fixed costs, on optimization, improving our billing efficiency as well, and taking advantage of economies of scale and synergies wherever possible. So this is the same chart in PKR, and you will not see because the currency had been constant this year, so there is not much difference in margins and growth percentages. So I will just skip this slide. This shows quarterly revenue and profitability trends. So this year, company has consistently grown quarter over quarter in revenue, and the profitability has also improved. Absolute profitability has also grown quarter on quarter as well. This is an important slide for us. This is an important slide for us because it shows that despite of 13% contribution from Pakistan region, the revenue in PKR is only on 9%, and 91% of our revenue is primarily denominated in USD, but in some other currencies like Euro and GBP and AED as well. As opposed to this, 43%, only 43% of our cost is in foreign currency, but 57% of our cost is in PKR. I will just move to the headcount dispersion. Pakistan continues to be our primary delivery center with 82% of our resources based in Pakistan. Then we have, because of projects, we have 12% of resources working from UAE. Egypt is evolving as a delivery center for the MEA region with the increased significance now in this current situation. 2.24% of our headcount is based in Saudi Arabia as well. This shows revenue by vertical and customer split by vertical. So BFS continues to be the leading vertical for us, covering sharing 30% of our revenue. Then it's telco, which is 25%. For technology, includes all the services that we are, all the partnerships also that we have with the other SI. Retail and CPG contributes 10%, and 24% is all the other sector where healthcare is taking the lead, but still small enough that we are clubbing it under others. This is our client composition. Roughly about 29% of our revenue comes from top 5% clients, top 5 customers globally. 37% is coming from top 10 clients, and 50% is coming from top 20 customers, which shows that we are well diversified in terms of our customer concentration. This client metrics is very important to see that we are gradually growing our customers from smaller tiers to larger tiers. So now we have 6 customers which are $5 million plus. And we have customers growing from 500K to 36K. So Asif would cover AI in detail in his questions. And I think I have covered the finance part. The investment priorities continue to be AI and GenAI, M&A, and upskilling of talent for sure in AI and other skills. So I think we should open the floor for Q&A. The presentation will be uploaded on our website for detailed review.
So guys, if you have any questions, please put it on the Q&A chat and we can take it one by one from there. So we have a few questions. Asif, should I start with that?
Sure. Please go ahead.
Okay. Now, this is something very interesting to start off with. maybe you have the crystal ball for it. What is the expected impact of Middle East war? What are the opportunities you foresee emerging from this situation?
I think, yeah, that is most. This is, of course, the current situation is unprecedented, unplanned, and nobody has a crystal ball. But what I can tell you is what could be the opportunities arise or the challenges after the war stops, right? Of course, until it is going on, there is a different times, but eventually this has to be ended soon or later, nobody knows, but it has to end, right? So everything starts as an ending point. So from our perspective, of course, Middle East is one of our top region. What I can tell you from our, because we are diversified in almost all the countries where we do business in GCC. So Saudi, we are seeing still a very strong demand. We have even seen the upsurge in the demand during last 45 days. No RFP got canceled or no RFP get delayed, or more RFPs are coming, more people are doing more work. So there is definitely a lot of movement, and Saudi is a very big market, as we all understand. In the GCC is Saudi one side and rest of the GCC on the other side. So a lot of investment is still happening. And Actually, I've seen an upsurge versus the downside or anything that is what at least we are seeing. And I think most of the people I'm connected, I think that's what the discussion is. Of course, from the other market perspective, currently the other regions other than Saudi, nobody has stopped anything yet. No one has said like reduce anything yet. Everybody is like all the projects, all the staffs uh, has been going as is basis. And more importantly, I would highlight a point. There are a lot of people like I have a lot of people, systems have a lot of people in these other geographies as well. None of them has come back yet to the country because of a scare, like for because of current situation. Everybody stayed, but there are a lot of people from like big consulting firms have moved away for time being. And we always know there is a gap. Somebody has to do work. Somebody has to hold the fort. Somebody has to run the business. So there is definitely, once this settle, there will be some void which somebody has to fulfill. And there may be a financial crunch where more offshoring, more cost saving, more desired, more outcome, more automation, more security, more resilience, more data embassy type of work, more data integration, more infrastructure now from cloud to normal to cloud to local data centers to something is going to be changing, like in the region with the current perspective. So somebody has to do all of the work, right? And as on top of it, AI is emerging, and a lot of people, even if I give you a response from the research that Gartner, IDC, UI, and all of them has done, that adoption rate is still very low. Because and most the biggest challenge that what everyone says that their data is not ready for AI right now. So again, a lot of demand, a lot of work that needs to be done, and that's where will be the opportunity. So I think whoever stays resilient in this environment, be focused on their customer. I think we're lucky and grateful both with the hard work. We have a huge enterprise customer base. So customer base is the most important factor in our business. If the customers are there and they're enterprise customers, essential services businesses, telcos, banks, they are not, they might have a here and there, but they don't go out of the business, and their digitization will be more and more, as I shared. And cost saving will come, like CFOs of those organizations, if the demand is a little bit curtailed due to inflation or high prices, they will definitely come back to the cost saving, which is definitely Pakistan is still Unfortunately, we have been appreciating the dollar, but still we are very price competitive. But I'm sure there will be some relief in the current year, if not more, some relief going to happen, which will make us more competitive in the space. But we are playing that aggressive game in any case in the expectation or anticipation that it is going to or bound to happen. If not now, maybe a quarter later or 2 quarters later, but it's bound to happen. So as our strategy is always the growth-led strategy, and that is what we are focusing even in this time. And as I said, so far, uh, this is the situation, but it all depends when everything gets settled and how big the opportunity. But I think one other thing I would like to highlight, even if in a normal circumstances, you're competing with a lot of people in the difficult circumstances, in the disruption, you competing with very, very differently. And if you can be aggressive, there is a humongous opportunity as well in this challenging time.
Asif, if you want to highlight anything more about the other Middle Eastern markets like UAE and Qatar, I'm just asking you because the questions are mostly revolving around these. So if you have anything further
Yeah,
to add
as I
into,
said, I said this, right? The other markets I clubbed into other market means Saudi is one and the other is UAE and Qatar. Qatar, very small business we have, not a lot big business. So it's really meaning like not going to be a swing state either way. So only Dubai and Saudi, if you compare the GCC, these are the two countries where we have a lot of business. And I think so Saudi is, as I described so far, very healthy. Dubai, status quo mostly. Nothing has changed. Even the projects which are running is running. RFPs, we are responding. People are talking about moving more people to offshore for the cost saving. And as I said, there are people who ran away in the situation, they might come back sooner, they might come back later. So there is definitely a opportunity in between. So nothing has been impacted right now, but in UAE, especially, I would say a lot will be uncovered when things start to a normalized situation. When then we will know that how big the opportunity is, or how much and how big is the opportunity, or we can be a status quo or the other way around. So it's a lot to be uncovered, but I think as I said, we see this as unique opportunity because uh, a lot of people have created a space, in the companies and the companies need to work, right? Unless and until some crazy thing happens, which we don't know.
okay, thank you. There is another question regarding the acquisition of Confis. Is it expected to accelerate the growth in North America? What synergies have been realized so far, and what is the expected revenue and margin accretion from this acquisition in fiscal year 26-27?
Yeah, we are so bullish about this, and the timings couldn't be perfect. Of course, it's everything has not been planned, looking, and nobody knows what's going to happen last year when we did that. But North American market is the big market. Direct access and enterprise customers, which Confis has, is definitely giving us a lot of momentum and a lot of hope and a lot of opportunities in the pipe, which we can convert, and we can cross-sell and upsell a lot of things, which we have. So very, very bullish about that. In terms of the realization, as you all know, in acquisition, like it takes a couple of quarters, and we are still in the process of going through the legal work, and once we get an approvals and everything, the merger officially is going to happen. Although we can consolidate the books from January 1st, but of course we are still going through the legal process. Once it is said and done, it will be a great momentum that we can see, and we can definitely the margins and everything will improve as we take over, as we realize synergies, as we remove the duplication, as we cross-sell and upsell in the existing opportunities. So it's not like a immediate shift, but definitely a very good foundation for us to launch our US business and turn around, and the margins are great. And again, in US, with this inflationary pressure, it's not like GCC countries only. The inflationary pressure is trickling down to North America as well, like in California type of states, $7 per barrel and $4 or $5 in other type of states. So it's these things definitely trickling down to a companies, and when the inflation is high, then everything gets imbalanced, right? So definitely over there will be a cost pressure due to AI and so there will be a lot of on-site displacement I can foresee, and a lot of jobs moving to offshore. And again, if we are with the customers and we are with the principals, with our cost-based structure and with configs being there, Egypt is being now set up. We are setting up Jordan. We have now multi-country set up from a supply perspective as well. And with the AI recruitment that what we are engaging, it's not like we have to be physically present into every country. We just need to recruit the best talent and put them and train them into our culture to perform. So answer to your question is that definitely it's going to be one of the stepping stone in our growth journey. But
Okay.
it's a time, right?
So it would be reflected into full impact. How much time would it take? 2, 3 quarters from now, 4 quarters from now? What do you anticipate? Based on your experience with the previous acquisition.
Yes, numbers will start reflecting from quarter 1 once we get an approval from a legal compliance and everything, as all the authorities and court and everything. But the realization immediately starts, but impact of that realization, the synergies, because we see a lot of synergies, a lot of duplication, a lot of cross-sell, upsell opportunities. We have started the process, but it takes usually 2 to 3 quarters to make sure all the people are at the right places, all the structures are aligned, the cultures, the offerings, the GTMs. So because it's a work in process right now, so I would not count that first quarter as wasted. First quarter, we have done a lot of work. But of course, once the legal process is done, then we are legally taking and going to the fifth gear and just make sure that we double down on every opportunity that we have, because it's a humongous opportunity ahead of us.
Okay, thank you. There was another question. Please share the approximate headcount for Confis and BAT's captive BPO business.
I think we are directly services business, so we're not forecasting, but I think we have decent sized business, and you guys, like from BAT perspective, it sets again, somebody, if you're asking about a BAT, it's like a confirmed business, so it is not impacted by anything, any upside, downside. We have a volumetric growth. Where we started, we have a good growth trajectory now as well. And in Confis, of course, people go here and there, but of course, we have sizable business from Confis as well.
So if you would like to share the headcount, or you won't like to share
I think headcount, I think we will just because it's a directly proportional, right?
Okay. Why is the revenue contribution from North America shrinking, and what is the expected in the future?
I think that's the purpose of the acquisition, right? If you answer, very good question. I think our North America business, as everybody knows, that it's not a direct business. Most of the business comes through our associated company. So if they are growing, we are growing. If they're not growing, we're not growing, right? So the growth is there, but not at the level which satisfies the growth company-like system. Since we want to have a hyper growth journey. So that's why we have taken that step, that we just need to acquire and get the foundation, and we go ballistic. And our US contribution and the Europe contribution in the segment needs to be better and improved. And I think it will be visible in this year, in 2026. It's not like at the discount of not growing Middle East. Middle East can keep growing, but our North America and Europe business pie needs to be bigger in our portfolio, right? That's what we really want to diversify because of current geopolitical situation, which of course nobody could predict and foresee, but having a diversified markets and geographies give us a lot of strength and resilience against any headwinds, right? So that's a purpose, and it will be a, I would say, if it will be a significant improvement, if I want to use the word.
Okay. Now, this is something interesting and has been mostly talked about. Industry experts are projecting that advancements in AI will drastically reduce our IT services exports. In the short term, they say there might be an increase in work because of increasing work for agentic AI, but in the longer term, it looks bleak. How do you expect AI to impact both systems in particular and the industry in general?
I think every wave, like it's not like we have we have been seeing these waves since 90s, when internet, the .com, the cloud, e-commerce, digital, AI, everything has everyone every disruption has said this is going to happen. The e-commerce will wipe off retail and so on and so forth. So the companies will be wiped off for sure if they are not adopting or changing and training their workforce on AI, right? That's one thing is sure for sure and certain. This is going to happen, right? But the services companies like us and others in the industry, if they are following and they're training their people, if they are making sure that all the latest thing that people know how to use the vibe coding and the productivity and the agentic and a lot of things that is the AI needs, because AI need the tech stack. Tech stack is the data centers, the infrastructures, the GPUs of all sorts, the security, the guardrail. There's a lot of work, the data engineering underlying it, because 57% of the company, as per the Gartner research, are they believe that they don't have the data readiness for AI today. So all of these things is creating a demand and generating demand. The traditional work, the simplistic work, like creating a website, creating a mobile app, creating an application, creating a portal, is going to be definitely displaced sooner than later. And luckily and unfortunately, we are not working most of it on that because we've shifted to a principle-led approach. Principle-led approach is like if Microsoft is coming up with the AI solution as a partner, Microsoft doesn't implement by themselves. We implement Microsoft tools, and if customer wants to leverage AI and the tools and what Microsoft, SAP, and other principals are releasing, because they are investing billions of dollars in AI, because they cannot be displaced. If Microsoft, Oracle, all of them gets out of business, of course, we generally naturally going to be out of business. But what there is a bet like Microsoft is going to remain. All of these big companies are not going to be out of business because world relies on them. So all the AI tools that is coming, we are making sure that we are one of the first mover advantage in most of the tools, at least in our region. In America, there are so many players, but in our region, we have proven multiple times at the enterprise customer where we were the first one to implement the new things at the customer side. And that is giving us the first mover advantage and barrier to entry for the other partners, because customer needs a reference in the success story before moving into the next round. So I think with this approach, it's if principles are displaced, we will be displaced, but principles are not displaced, then of course we have a lot of opportunities that we need to do and keep doing it.
And another very important thing which is being doing the rounds is that the Middle Eastern economies, they were generating huge amount of current accounts surpluses, and that was getting invested into AI globally. So with the onslaught, the investments into the AI would be your thoughts on that, if you have anything to say.
Investment in the AI will continue. I think the value realization will continue. I think we will go from proof of concept to proof of impact. So far, everybody is talking about let's do a POC, let's do a use case, and let's do this, let's do that. So now people are in this crazy times, you have to move away from POC to proof of impact, right? What is impact? What is my ROI? What is the value realization? So discussion has changed. Now customers are not asking what they were asking last year. Customers have changed their thought process as well because they don't have the money to be wasted on the POCs and the use cases, and they don't want to do it for the sake of doing it. Like we are AI-enabled organization because we have a FOMO, but they really want to select one or two use cases instead of 10, which can create a value, and that's sustainable revenue, and that's a sustainable workforce. So I think the conversation we have, because we talk to customers, the conversation has been shifting and it will shift further. And on the low end work, conversation will be why would we need the people? You rightly said that. So I think we have moved away from this business largely because, and we are using it wherever we are doing this business because we pass on that productivity to customer, and we're training most of our workforce to use these tools.
Okay. Osama is asking that following the Citrini paper and the correction in the SaaS plus Indian IT like Infosys and Tata, are you seeing any real change in client behavior due to AI in terms of deal sizes, pricings, or project timelines over the last 2 to 3 quarters?
I think definitely like look at the TCS, and they are like 50 billion, 40 billion, $30 billion companies. So for them, double-digit growth is a lot of revenue, right? So they in this TC, like if I'm reading the question rightly, all these big companies, they have a lot of low-end business as well, which I was explaining, like having a people on the managed services, doing like a simple, trivial stuff. That is definitely going to be challenged, right? So I think that's where large Indian companies who are following the BPO, help desk, all type of work, the simple routine tasks, they will definitely take some beating, but they are also coming up with the AI tools proactively and giving it to the customers and saying that, okay, if we were having like low 100 people, help desk people, now it will be 10, and 90 of the jobs will be replaced by agentic, and you buy our tool and it takes X amount of money per month or whatever. So things and conversation have changed. So they are making still the same amount of money, but through the tooling versus, because agent is not free of cost either, right? Agent has a cost as well, which people don't understand. Agent has a cost as well. It takes GPUs, it takes data center space, it takes the compute, it takes the storage, it takes the memory, it takes, and everything has a cost. And when you are replacing the jobs at offshore, offshore has a less cost versus on-site. So on-site will be first displaced, and on-site will be first challenged than the offshore because the cost of on-site people on the help desk is much higher than the cost offshore. So it's a disruption is going to happen, but at a low-end job. High-end job or enterprise, very complex stuff, AI is not like doing 100% everything automated. It will be very tough because very complex integrations, like when you talk about the core banking, when you talk about large manufacturing, SAP rollouts, and so on and so forth. It's not like everything can be done push button because the most important thing in our business is the change management. It's the change management. Change management needs people, right? Because human psyche cannot be changed by AI overnight. So the largest component why people hire the SIs and the consultants and so on and so forth, because they cannot manage the change in the organizations. If they could have, they would not even outsource.
Okay. Okay, I think GCC exposure disruption you have already covered in detail. So move on to the next question, which is interesting given the recent reports regarding strike on AWS data center and Babe IN. What is the company's business continuity strategy?
I think these data centers are not used by us, it's used by our customers, right? So it's AWS has a direct contract with the customers in Dubai or Bahrain. I think that's what somebody's trying to say. So both geographies, yes, they were impacted, but there is a proper DR and BCP because when you do the cloud, that's an advantage that you do your active in one region and your passive is somewhere else, which is not in the region largely, right? Mostly in Singapore or somewhere close by, right? So largely customers have impact, but not something which is out of bound. The banks are running, like there may be a disruption for a day or so to make sure that all the thing is over, but I don't think so. For us, it is not impacted because it's mostly signed by the customers and customers directly deal with it. But I've not seen the big disruption either because of BCP and DR planning. It's easier in the cloud versus in your own data centers.
Abdullah Salim is asking, can you please guide on the revenue added through acquisition of BAT and Confis, and also guide on what margin improvements would these acquisition bring to systems?
I think definitely, as I said, the margin improvement is gradual. BAT is stable. So of course, margin improvement is rather quick than Confis, because Confis, as I explained earlier, it is a enterprise business. It's a US business which require investment, and we have to double down on the growth. And when you double down on the growth, you spend initially on the market strategy, and then you get the rewarded. So the margin improvement is definitely going to come, which I'm very confident. But of course, you have to be on the growth path first before you worry about the margins in the new geography. And you must have seen, whoever is following systems, our MEA region was not in green or not that much green a few years ago, but we were at it. We were persistent, and now it's showing the great result. Pakistan is another example. We were losing money for last 10 years. We have turned it around. So we know how to make money, but of course, it's everything at a time. Of course, so we see the improvement is going to come in top and bottom line both.
Okay,
Of course, it all depends. I think one thing I want to highlight, since you asked about the question and everybody's asking about the margin, I think since 91%, as Rui mentioned, very few companies in our country who has a dollar-based exposure of 91%, which is favorable. But last 3 years, it's been unfavorable, which is unique situation. But in the current situation, I think I don't want that dollar to be devalued because because it affects a lot of other things. But little bit of devaluation is required, and it will happen, and it will help us in improving the margin. If dollar keep appreciating from here onwards, of course, our margins will be depressed, and that is given. And I don't want to. This is natural, right? Our inflation is increasing, our cost is increasing. We cannot sustain for long and keep improving and keep growing with the appreciating dollar with the 91% exposure, right? So in dollars. So if that continues, of course, the margin will be depressed for sure. I don't want to mix it anything.
The regional exporters also are devaluing. So look at Egypt; they have devalued the currency since the start.
Everyone, India as well.
India as well.
So I think that's what I'm saying. If we are anomaly and we keep appreciating our currency, of course, we have a risk of margin depletion, and we can't do much. It's out of our hand. But we will continue to grow the dollar-based business. That is our model, regardless of appreciation or depreciation, because it's a short-term metrics. We want to rely on the foreign exports and foreign currency more, even euro, pound. Even we want to have a mix of currencies versus dollar, and of course, but all foreign currency is our focus, and we will continue to do that regardless of we get few beatings in few quarters. It's okay. Because of that, it's okay.
Fine. What will be the impact of 5G in Pakistan market and systems limited?
I think it will be all positive. I think it cannot be the other way around. If the investment is happening, a lot of use cases is going to come, and as I said, proof of impact, and somebody has to do the work. And we are in all the telcos, and nobody else has that kind of a muscle and the skills that we have at global level. So we are very focused on all of these, and even Telenor PTCL merger is happening, and we believe a lot of opportunities will emerge since both of them are customers, so we know both. So we are the only player who knows both in and out. So we see a lot of opportunities in Pakistan with this, not just 5G, but recent transaction that happened in our industry as well. So Pakistan is definitely, we are not discounting Pakistan for growth anymore as we have turned around into green. So we will push hard on domestic market and make sure domestic market that makes almost similar amount of money as our other foreign markets make. And that will be a huge win if we can able to do that. If I don't want to have a distinction now anymore that Pakistan profit needs to be down than Middle East and Middle. So we really want to, we have that kind of a mindset right now. And as we have seen the improvement, we will continuously see the improvement. May not happen overnight, a few more quarters, but we will get there. Because Pakistan has a lot of opportunities, and now we're going after crazily on those big opportunities. We are not signing up any deal in public sector or small customer or medium customers, all enterprise customers, only enterprise customers.
All I can say, over the years, this is the first time I've seen you bullish on the Pakistani market itself.
Right.
Okay, and now
Time changes, right? So when time
time
changes, you have
changes.
to
Yes, this
react.
is
You have to react and change your
all
strategy,
across.
right?
All across, we've been hearing that Pakistan is more of a training center, and now you're doubling down. It seems like you're doubling down in Pakistan. So good luck on that front. Uh, Zohaib is asking, has the Middle Eastern war affected Vision 2030 project in Saudi Arabia? I think you've mostly answered. You're seeing more business, more traction coming through?
So far, yes. And I don't think so it's going to slow down either because Saudi's tourism is very different than UAE tourism. It's a religious tourism. They have a very different kind of population mix, different kind of strategic mix. And I think what is going to happen, a lot of projects which were non-impact based projects, which were done just for the sake of it, will be stopped sooner than later. Like NEOM has slowed down, and there are a few other things will slow down or stop. So the money which is sucking into a non-productive will suck in or invested into a productive opportunities. So I think it could be a pivot for KSA Vision 2030, where more productive things, the AI, tech stack, uh, digitization of services, and their Riyadh Airways, and a lot of things is going to be launched. So definitely it could be a potential upside versus downside.
Okay. How do you view systems competitive advantage in UAE over your Indian counterparts with respect to AI offerings, assuming that the cost advantage of human resource that Pakistan holds would be nullified? And secondly, if you could club that with this, a lot of people that we speak to, they also tell us that look at the valuations of the Indian companies, they have come off a lot. So maybe if you can uh, the, elaborate on both and how you are different on that front.
I think I would still say that like we we have been seeing for last 10 years, we go with an approach of best quality talent, even though quantity is limited. Like Indian companies have a lot of people, but they don't put their A players still on this market because they have still demand for A players in Europe and America like anything. Their revenue mix is 90% North America and Europe, 5% APAC, and probably less than 5% Middle East. So if you have a less than 5% of your top line coming from the Middle East as a region, your CEO doesn't focus on the less 5%. I don't do. If I will have 2-3% of the business, I might not focus on that, right? So the focus is very different. So still we have, and I don't think so nullifying the cost advantage of Pakistan and Egypt produces and have is very hard unless and until we keep appreciating the currency, right? Which will be stupid in my humble view. If we keep doing it, then of course we will reach at a point where we will nullify this advantage versus the other way around. Otherwise, I don't see that, right? Otherwise, I don't see that as happening. So still we will have an edge. I think, again, a lot of things up in the air, especially from UAE perspective, that how things get settled once this episode is over.
And with the clubbing it with the recent change in hearts with the UAE, uh, they asking us for the deposit back. Are you seeing any slowdown in visa approvals for your staff or stuff like that,
This
or
this
is
has
business
been
as
for
usual?
this has been visa slowdown, to be honest, has been not it has been for last, I would say, 9 months to a year. So it is not recent phenomena. We
Okay.
have been struggling for the visas for long, and it is everybody knows about it. It's not a secret sauce. So that's why we have opened. We have doubled down on our other centers like Egypt. Now we have Jordan will is up and running. Malaysia is going to be up and running. We have centers small, but we are double downing on those new geographies. So we really want to avoid this dependence on Lebanese were coming. We have a lot of Lebanese people working on. Of course, now the war has changed the situation remotely, and for us, so there are a lot of people joining us from Middle East, and for while we are sitting in Middle East, we nobody is stopping us to hire Indian talent as well in Dubai, right? At least. So we are tapping on that as well. We are not, of course, we would love to. We want to send our own people. We want to give them our own opportunity, but business first. We cannot just stop growing because we are not getting visas. So we have found a way in last 9 months to work around that model. So so we have already figured out this, right? Largely, it's not a good sign, but what do we do?
You have to continue the business. And there is also a lot of talk happening around that with the exit of some of these Western companies,
Yeah.
the good talent pool is available to some of the middle companies. So, as a result of, have you seen some kind of that people exiting the big Western companies, exiting the Middle Eastern markets, and the talent pool that is available as a result is available to you guys? And are
It
you
will
planning?
be. I think in COVID it happened. I'm sure it will happen again. Right now, of course, it is just a month or a month and a half roughly to this incident, unprecedented, unwarranted, which will hopefully we all pray that it resolves soon. So then we will see all of these things, right? And what will be the recovery looks like? It's a V shape, U shape, shallow U shape, or whatever, right? But there will be a recovery for in all these angles, right? So we have seen at least the UAE came back all of these incidents in the past very strongly with a lot of out of box thinking, a lot of innovative ways. But again, as I keep saying and I keep repeating myself, that it has to end first before we conclude and jump onto the next step.
Okay. Uh, Under the Iran-Pakistan $10 billion projection, will systems be able to manage current market share or expect some changes in the share? The
Sorry, 10 billion.
Iran-Pakistan initiative, where they are, I think he's referring to maybe $10 billion of
I don't
exports or
know.
stuff
I'm
like
just focused on my billion.
that.
I'm not worried about
Uh,
the
do you
other.
have any exposure to FX swaps to hedge against the currency or to the risk of currency devaluation which the company is exposed to?
I don't, sorry, if you can
The
simplify that.
risk, you would want it actually. Why would you swap it out exposure? So, okay. What is the current employee attrition rate compared to the previous quarters?
It is, to be honest, it's coming down as we are moving into that space because the opportunities of going to the Middle East is not as as it was last year, and I think it will slow down further. So the most of the talent that was leaving us was going to GCC countries. So hopefully that will help improving our retention.
I think you have highlighted this before as well in the previous quarter. Some restrictions come as a blessing, so the attrition rate definitely have slowed down. I think Shalin, let's close on with this last one very good question. When are you planning to hit the just mentioned $1 billion mark?
I want to do it tomorrow, but of course, there's a process. It's a journey, and we're working towards that. And with organic and inorganic growth combination, we are on that trajectory. We have set the foundation for our growth. At least we are not there yet. We have just set the foundation. Now the foundation is set. We have acquired few companies. We have global presence. We have multi skills, multi industry. So we have followed the playbook. We're going into AI on deep, and once the path is there, the growth path and the journey is there, I think it will happen eventually. And when you reach a certain threshold, you become relevant to your customers, you become relevant, more relevant to your principals, and you get more opportunities. As I always say, that scale makes you bigger and better. That's the only recipe. And I think as we scale, we will be relevant in the marketplace, right? So we have to keep hitting the milestones, right? In between. It's $1 billion is not a goal. You have to keep hitting the intermediate milestones so it can give you that kind of a inward throughput as well.
Somebody has posted a very good question as a follow-up. He's asking which year, please, if you can elaborate. Okay, one question from my side. I have seen personally over the years that Systems has gotten aggressive on the M&A strategy. You did NDC Tech, you did BAT, and then Confis. So I think the momentum is gaining. So should we expect more M&As this year, or with the onslaught of with the evolving situation, you think that near term it would be a slowdown on the M&A strategy, or
I
maybe
think
you?
it's not definitely slowing down on that. Of course, we are merging these things which we have done. So everybody is asking question when you will hit the profit, and so we have to digest that well and we have to integrate that well. But it doesn't mean that we are slowing down in the future, because in this crisis situation, you get more opportunities in the depressed valuation. And when we are cash rich, when we have the funding, when you have the financial muscles, when you have the sales muscle, when you have the market access, we will look for those distress opportunities which can complement and supplement us. So this is the ideal time for M&A actually. In next month or two, there will be losers and winners. So you have to keep an eye. If the good company is losing because of something which is out of their hand, you have to grab it immediately. And I think we are very positive that we will continue that, because this is it. If you go, as I said, if you want to go to that journey, it's a combination of organic and inorganic growth at this level. And this is the playbook that all the big companies have written in their model. And we are not different. We can't be different than others.
So you are contemplating a few M&A options as we speak?
We have written in our director report as well, right? We are very open about that. We are not doing M&A for just the sake of an M&A, but actively looking for opportunities and the deals which make sense, right? So as I said, in crisis situation, this is an ideal opportunity to look for those people who have been hit by the situation and not because of their wrongdoing.
Okay. I think we've done almost everything that was available for Q&A. Thank you, Asif, for such detailed responses. Thank you, Ruhi. Thank you, Tahir. Thank you for everybody that took the time out to join and attend this wonderful investor briefing session. If you, as a result, have any follow-up question and answers, we, Inside Securities, and the management of Systems Limited will be available to answer those. just feel free to reach out, and we would be happy to assist you. Thank you once again, everyone. Thank you. Thank you so much.
Thank you, everyone. Thank you.
Thank you.